Hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Quick training video on the CLPORT strategy that I put out, the crude oil power open range trade. What I want to go over right now quickly is how you determine or define what I'm calling a small box. And what we're looking at right in front of us right now, as I'm moving things around, is what I would call a small box. How can you determine if it's a small box? That's the question. And when there's a small box, you want to stand aside. So SA, stand aside, right? So don't trade. All right. So can you count the bars? Could you sit here and count them? Yeah, I can count them. And we could physically count this quickly, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So somewhere between, let's say, just round and say 25 bars. This is what I would tell you is a small box, and it's best to stand aside from it. Now, it's also inventory day. The crude oil inventory on Wednesday today is coming out as well. So this historically, it's not the best time to take on that 2-to-1 trade when you're looking at the CLPORT strategy. Another way to determine if you got a small box, I mean, this is what I would call a small box. So from the open at 8 a.m. to the 8:05 area, so the opening range right here, the 5 minutes that I like to look at the open range of the open outcry in America, in the States, this right here can determine whether or not you want to be involved in the opening trade or not. What I would tell you is when you see something, and if you look at this distance, let me get rid of some of these lines. So if you look at the distance between here to here, right, we just talked about that, that's small, and you look at the distance between here to here, you can determine that it's a very small range, right? So 57.66 to 57.82. So that range itself is what is that? 10 right there. Not even 20 ticks. That would be 20, right? 20 ticks would be 86. And what I would probably tell you is that would be the minimum range that you should be looking at before you would think about putting on a trade. So 20 ticks of range of movement inside 5 minutes might be a good indicator that you've got a decent day setting up, at least as it relates to price action going up and down. But on the other side of that, you need to see this right here. So let's just assume that this was the 5 minutes. All of a sudden this gets kind of hard to count, right? And if this was up here, like up here, and all of a sudden we're sitting at this kind of range, can you see the difference here? To me, if this was the 5 minutes of range and it's above 20 ticks, this is more conducive to the open range trade taking on after the 8:05 mark. I hope this helps you. This is Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. I'll see you on the next video that I put together. Bye for now.